Good morning, everyone. Going to give it a few minutes to allow everyone to start coming in. Good morning to everyone coming in. Going to give it one more minute. Good morning, everyone, and thank you for joining us. My name's Lauren Simpson, and I am with the Los Angeles Network Small Business Development Center. You have logged into a wonderful webinar that we're excited to launch today. Today is our first session. It's with Ms. Lori Williams, who's one of our fantastic business advisors. Before we get started, I want to go ahead and give you guys a heads up on, or just, little detail as to who we are and what we do. We are, again, the SBDC, or the Small Business Development Center. It's a national program with over 1,000 locations across the country. And we offer no-cost services to local businesses, local small businesses. Because of the funding that we have federally, these resources that we can offer, webinars just like today, are free. They're paid for by your tax dollars. For the Los Angeles Network, we have 8 locations, as you can see, as far out as Santa Clarita and Camarillo, down to Long Beach, through Ontario, Pasadena, LA, all throughout the LA, Santa Barbara, as well as Ventura counties. Again, what we do, we offer no-cost business advising and virtual trainings. Again, today is a virtual training. I'm joined today by my colleague, Lori Williams, and she is going to get us off on SmallBiz Talks. That's our new show, SmallBiz Talk with Lori Williams. If you are looking to contact us in any way, please do so. The phone number is 866-588-7232. And you can see the URL on your screen as well. I'll be sure to include this information into the chat, so that don't worry about trying to hurry up and copy that information down. Just a few housekeeping rules. There will be a Q&A portion. So as you're listening to the presentation, please include your questions or add your questions to the Q&A section. The chat will be for chatting. So if need to post information that Lori provides, i.e. links to a form for you to submit questions later on after the show, as well as contact information in case you all need anything else from us. Again, add all of your questions to the Q&A. And at this point, I'm going to hand it over to Miss Lori Williams. Thank you.
Well, thank you, Lauren. Thank you for that great introduction, and welcome to what we are saying is our very first show in a series today. So Small Talk LA, how it came about is, some of you may be familiar with me on other webinars. I was one of the hosts on the PPP webinar that we had for quite some time. And I've been a small business advisor for, I was just actually stuttering to think how many years. I think it's over 10 years, guys. So I have been involved with the SBDC for over 10 years, and I also have a 30-year background in consulting. Now, where I came up with the idea with Small Biz LA is, I see people on a daily basis, clients, talking about all different subject matters, and I decided we needed to have a show that actually addressed some of the topics that I see most often, things that people get into trouble with, they want to know more about. So during the series, which is going to be held every week, we're going to have certain trainings, we're going to have guest speakers coming on, we're going to be doing a whole lot of cool things. So with this first one, let me go ahead and get started and get the presentation going so you have something to see here. Give me a second. Okay, so SmallBiz Talk. Once again, welcome to the very first one. So we're going to have, during the weekly series, we're going to have guests come on and talk about different situations, whether an advisor with information to share. We're also going to have clients come on and talk about the experiences they have. So as Lauren said, please put your information in the Q&A. I'm going to try to address some questions at the end of the show. And if you also want to be a guest on the show, you have something you want to share, or there's a topic that you're saying, I really wish I knew more about, put that in the chat as well. Lauren's going to be taking in all that information, and my goal is to create further upcoming series based on what you're wanting to hear. So with no further ado, let's talk about today. What we're going to do is we're going to discuss two topics, and this show is going to carry over into the next one. And the two things we're going to talk about is lessons learned and a pandemic cash flow. Let me tell you what lessons learned is about. Over the last 2 years, I have been fortunate, unfortunate, sometimes I felt both, but to be one of the top experts on the PPP, the EIDL loan, the SBA loans, and my area of expertise is legal, tax, and finance. So that translates to looking at thousands upon thousands of tax returns, financial documents. I don't even know the number of documents that I looked at during that time period. What I experienced was so many people did not have an understanding of their legal structure, what they were required in tax, their financial statements, and time again, they were running into problems. They were running into problems applying for any of the SBA loans. They were running into problems because they didn't understand where they were financially within their company, all types of situations. So the lessons learned is going to be a brief overview on this topic in several different areas of the issues that I saw clients have because they didn't have a full understanding of their legal, tax, or finance structure. So we're going to start off with that. Then pandemic cash flow, I'm going to tell you a little bit more what it is, and we're going to go into the next session preparing you to get into more detail. Where the pandemic cash flow came from is the fact that you always need to understand your cash flow, your cash position. Every company needs to understand that. But now is so important and vital because things are changing and have changed. Companies that had a certain amount of cash flow pre-pandemic don't now. They've taken on additional loans. They may have been shut down for certain periods of time. So before they start going forward, you really got to get your hands around how much cash do I have today? How much cash will I have in the future? And so the pandemic cash flow is something I called it, and it's a morph between a cash forecast and a current cash flow. We'll get into more details with that, but that's what we're going to discuss on today's show. So let's start off with these lessons learned. From a legal perspective, everybody must understand the legal structure that your company operates under, the required documentation and yearly filings, and the tax documentation for your specific legal structure. Whenever I'm talking with clients, especially right now, with many of them that are being denied the EIDL increase or having problems getting the loan increase, the first thing I'll ask them is, what legal structure are you functioning under? And sometimes they don't understand that. What required documentation? Do you have these documents filed? Are you running into any problems? Do you not have your corporation set up properly? And a lot of times they can't answer that. And they're getting these documents from the SBA where they say unverified information. And many times it's because they've not done this properly. So for each type of corporation or legal entity, you have to file certain documents. I'm only going to go over a few today, the ones most commonly missed. One of them is a statement of information that must be filed yearly and bi-yearly. I'm going to get in an example and tell you more about it. The franchise tax fee, which must be paid yearly. And if you're an S Corp or a C Corp, you must do the annual board meetings and the minutes. Now, with the statement of information, I have seen a lot of people not file this. They may have gone through LegalZoom and LegalZoom helped them incorporate, but they didn't know that they have to file this statement of information. And I'm going to have an example in a minute and tell you more specifically about it. So here's the rules. A statement of information must be filed every year for stock and all foreign corporations and every 2 years for domestic nonprofit corporations and limited liability companies. It's limited liability companies that often mess up on this. So you have to have a statement of information filed every other year. Now, unfortunately, you don't always get a message from the government saying, hey, you've got to do this. You've got to put a little tickler in your file and make sure that you keep up with it. And if you miss filing it, they will charge a fee. Now, for every LLC and also corporations, they must pay a franchise tax fee yearly. Many times people think that if they didn't have any transactions, they didn't do any business, they don't have to file this LLC, or they don't have to file the statement of information. This is absolutely incorrect. And I've seen people do this more with the LLC. They say, well, I didn't have any transactions. It's not really open because I didn't make any sales. Guys, you got to understand, in the government's eyes, the minute you set up that corporation, that LLC, the minute you file the paper and you are organized in the state of California, you're in business. It's not like the government's going to say, hey, when you start making a sale, catch up with us. No, you're in business. And if you don't take care of these actions, these filing documents, fees can actually add up and charge interest, et cetera. So that's one of the misnomers that I heard from too many people, that they felt like they didn't have to follow this through because they didn't do any business for the last year. They were shut down on the last year. And when you start the LLC, you have to file on the 15th date of the 4th month. Now, speaking of filing with the state of California, there's also another thing that I've been seeing a lot that's misunderstood or people perceive and ask me about. They think, well, what we're going to do is we're going to organize our company outside of California so we can avoid the high California taxes. Okay, first of all, I get it. I understand that. I get what you're saying, but it doesn't work that way. If you file your company and you open your company in a state other than California, but you are a resident in California, you're doing business in California, even you're working out of your home office in California, you must file in the state of California as a foreign entity doing business in California. And you may have guessed this, it's right. If you're a foreign entity doing business in California, you are subject to all California taxes. So there's no way. I tell people, if you want to avoid California taxes, move out of California. Now, I'm not saying that to be disrespectful to California. I'm saying that if your company is in existence in California, you are still considered being in California and must file accordingly. Now, what happens if you don't pay these taxes? Your company can get suspended. When your company's suspended, you cannot apply for any loans. The loan officers will check this. So a government entity that's lending you money or a bank, they know how to make sure if your company status is suspended or active. Now, what I suggest is every person who has a corporation, an LLC, an S Corp, a nonprofit, a C Corp, understand how to check this status for yourself. So if I can pull this off and my links work, I want to show everybody how to check the status of your own company. And Lauren will put these links within the chat as well. So if I click here, I'm going to go to the California Secretary of State website. And Lauren, can you see that? Confirm for me whether you can see that or I have to reshare.
No, it looks good and it's clear.
Okay, perfect. Thank you. I might ask you that a couple times just to make sure the links are still letting them see it. So if you look in this middle section right here, you see search type and you select corporation name, limited partnership LLC, or entity number. If you select the name, the corporation name, the LLC name, this name must be exact. Guys, I'm talking comma, period, space. You've got to have the name exact. Sometimes it's easier to put in the entity number because you know you've got that correct. But then what happens is you search this criteria and it is going to pull up your company name. And it is going to tell you whether it is active or suspended. When I get issues like the EIDL denial, the very first thing I do is I ask them their name or their entity number. Now, entity number, guys, I should tell you this. We're not talking EIN number. We're not talking your EIN number you got from the IRS. We're talking about the number that is on your articles of organization or incorporation that you got from the Secretary of State of California, and it begins with a C, a letter C. So that's the number that we're speaking of that must be used. But this is how you would go search your own company to see if your company is active or suspended. Now, here's an example. I had a company filed in California years ago, so I could use this as a real example because I'm using my own information. You can see that this is canceled. It was formed in Delaware at the time. And you can see that I am listed as being the agent of service for process. So if I gave somebody this number or I tried to apply for something, whatever it may be, a credit card, they can look and see, okay, this is canceled. So when you do a check on your own company and you put in that information, right where it says status, it should say active. When I get the issue with clients where they're getting unverified information from the SBA for the EIDL loan, I do a couple things, but one of them is to go to this website, pull it up where it says active and do a screenshot and include that in the email correspondence so they can see it's active. Because what happens is you could mistakenly forget to pay the $25 statement of information. It happens, you know, especially every other year. We don't always keep track of that. What will happen next is they will send you and bill an invoice for $250. Say there's an old address, you didn't update your address. I mean, this happens more than not. And so what's going to happen next is they are going to suspend your company, and it's going to put suspended where it says canceled. This means I dissolved it. You're going to see the word suspended. And then if you, like I said, go to apply for anything, they'll pull it up and see that it's suspended. It takes some time to get the corporation active again. So that's why you always just want to do a little check. And I have been mentioning the EIDL loan and SBA because that's the thing we're seeing a lot, but this happens and is checked in other situations. For example, if you're applying for government contracting, sometimes when you apply for some vendor contracting, I have had some people that had government contracting that lost their contract, not knowing their company was suspended because they forgot to pay the $250 or the $225 and then the $250. And then it takes a bit to get it active. They completely lost the government contract because they could not get their company active in time. So you can see checking yourself to make sure your company is in good standing is a great step to take. Very similar in thought to why people check their own credit file to see where their credit file is at. So that's how you go about checking it, and that's an idea of what it looks like. Now, if in the worst case that something happens that you checked your file and it is suspended, I want you to look at this page. And Lauren, once again, will put this in the chat for you. This is from the Franchise Tax Board. The Franchise Tax Board is who is charging and collecting the $25 for the statement of information, which, like what I said, once again, it's every year or every other year, depending on whether you're a corporation or an LLC. If you're an LLC, it's every other year. If you're a corporation, it's every year. If you're a foreign entity, remember we talked about a foreign entity is you've registered your company outside of California, but you're doing business in California, you have to pay every year, independent of whether you're an LLC or a corporation. So if anybody on this call decides to check and they find out that yes, they are suspended, you go to this page and it tells you, well, you might be suspended because you didn't pay taxes. And if it's suspended, this is what you're going to have to do and how you're going to have to get it unsuspended, if that's such a word, and how and what it's the process. So this page gives you full detail of what may have caused the suspension. It's not just the statement of information. It's also if you owe any other taxes. I just mentioned the statement of information because that's the easiest one that people miss and forget to do. So that's what this page is about for in case you run into that. And once again, you want to try to really put in your file when you need to pay the statement of information, because it goes from $25 to $250 if you miss it by one day. Now, as of some time ago, they have a process where you can complete the statement of information online, making it very easy to do so. But once again, they don't always remind you. And I'm going to show you a statement of information in a second, but I want to also make a statement about another misconception people have. They think that if they stop doing their business with the LLC or corporation, there's nothing they have to do. They just stop doing business and don't file tax returns. Not true. An LLC, a corporation, must be properly closed. It must be closed with the Secretary of State as well as the Franchise Tax Board. It's called a dissolution of corporation. You have to file these documents. Once again, I've run into people who started an LLC through LegalZoom, had an idea, it was easy to do, so they went ahead and set it up. They didn't have a comprehension of what it meant to set this up. They didn't pay any of their statement of information or file any documents thinking, well, I'm not using it, it doesn't matter. It does, because what happens is then they get all of these fees, they get interest on the fees, and you can't dissolve the corporation with open debts. You have to pay this. So there's no way out once you get in. And so I'm really trying to emphasize this. And that's why I wanted to use this first show in the series, is to talk about these things, because I'm just seeing too many people that got caught in that. I created a business and through LegalZoom, maybe in 2019, didn't do anything during the pandemic. Oh, I just don't even care about it. I'll just forget about it. And they still have it open and they're still being fined accordingly. Now, this is what the statement of information looks like, guys. It's a really simple document. And basically what you're doing is you're putting in your business address, the officers, the directors, and this is your 7-digit Secretary of State entity number. Very easy to fill out. And if you don't change the officers, you don't change the address, you don't change anything, when you go to file it online, you will just say nothing's changed, and it's a very easy process to do. But just so people can understand what a statement of information looks like, that is what it looks like. But you will not have to fill this out and mail it in anymore. Like I said, you can complete it online. Now, when we come to taxes, you have to understand, how are you taxed? Are you taxed differently than how you are filed as a legal entity? Now, what that means is LLCs can be other companies too, but I'm speaking specifically to LLCs because this is where we mostly see it. An LLC can be filed legally in the state of California as an LLC. It will always retain the legal filing status of an LLC, but it can choose to be taxed by the IRS as an S Corp. Now, the reason why someone chooses that is to assist with taxation. In certain circumstances, not across the board, but in certain circumstances, depending on where you are in your net profit, a S Corp may have a tax advantage over an LLC. One of the misnomers people have is they think this is always true. An S Corp has more requirements than the LLC. So it's not like you just want to jump into that. In the upcoming series, probably in the next 3 or 4 weeks, we're going to have a complete discussion on the difference between LLCs, S Corps, taxation. So I'm giving you a little bit here, but know that if you're really interested in understanding this more, that we'll be addressing this in detail. But right now, what I'm saying is that if you are an LLC and you filed the government form, I think it's 2553 if I'm not mistaken, by the IRS to be taxed as an S Corp, you're recognized as an S Corp. So when you are applying for specifically the SBA loans I saw, but in all situations, you have to make sure that you understand the requirements from a taxation as an S Corp, not as an LLC, because that's what's going to be the determining factor on if you did it correctly. I'm going to show you some tax forms in a minute, which is going to make this clearer. But as I said, you must understand what legal structure you're operating under, LLC, S Corp. I mentioned those because they're the common ones. We obviously have nonprofit, C and partnerships, et cetera. It's just the bulk of the people we see on a daily basis have those too. So I tend to mention those the most, but you also have to understand how am I taxed? Am I taxed differently? And to that, you have to identify, am I properly paying the quarterly taxes? Now, this is another big confusion that people have. And they have this confusion whether they're an S Corp or a sole prop or an LLC. A lot of people that have a sole prop don't know if, when, or believe they don't have to make quarterly taxes. So once again, guys, I'm going to take a little piece out of this just to explain some confusion. We're going to have a couple sessions where we get into the details on this. So let's talk about how quarterly taxes work. I'm going to take the S Corp aside for a second because I'm going to talk about that in the next bullet, and I'm going to show you some of the forms regarding an S Corp. So right now, what we're going to talk about is a LLC versus a sole prop. Let's try to understand the difference between these two from a legal perspective and a tax perspective, because this is where I see a lot of confusion. So first of all, let's get in a definition. What is a sole prop? A sole prop is what they call as the default status of doing business. Say that I decide, I always use my kitty sweater example. You'll see in one of our sessions, I'll talk about kitty sweaters, but I use this as example. Say I want to start a company knitting kitty sweaters and sell it at the flea market. I don't register with the California state. I don't do anything. I just start knitting and I go to the flea market and I sell my sweaters. By default, my status is a sole prop, an individual owning and operating as a company. It's a sole prop. A LLC, on the other hand, that is when I am filing with the state of California as a company, a corporation. The key difference legally. Now, one of the things I want you guys to know, I said the word legally. You're going to hear me say the word legal, and then you're going to hear me say the word tax. Too often, people are speaking to individuals that may be an expert on legal structures, but not tax, or vice versa. So they tend to believe these are the same. They have the same rules, the same requirements, and they do not. Since I speak 3 languages, some fluent more than others, in the finance, legal structures and tax, I'm able to kind of move between these languages without even saying, hey, I switched language. So what I try to do is I back up and go, hey, I was just speaking as if I was a lawyer speaking about legal entities. Now I'm speaking as if I was a tax advisor speaking about tax. So going back to what I was saying a minute ago, let's talk about the difference between a sole prop, the default status of doing business, and an LLC legally. That's where we could say we draw a line in the sand. When I'm the sole prop, I do not have any asset protection, no risk protection. If someone sues me, they sue the sole prop. If I am an LLC, I have legal protection because the LLC is a separate and distinct entity from me. Same as the S Corp, C Corp. I'm just really getting on taxes and quarterly taxes, so I'm focusing on these two. Now, when I say the word distinct and separate entity, I want you to picture that if I'm the sole prop knitting kitty sweaters, here I am, I'm sitting on the couch, this is me, okay? Say I then file and I am an LLC, I am a separate and distinct entity. So here's Lori, who's knitting the kitty sweaters, which I can't knit, so that's not true, but here's Lori in this case knitting the kitty sweaters, right? Here's the LLC. If we can keep my hands in and zoom, they kind of disappear sometimes, my mysterious disappearing company. But here's the LLC sitting right next to me. So it's a distinct and separate entity. When it's a distinct and separate entity, that is what allows it to have somebody sue the entity and not me. So from a legal perspective, people go from a sole prop to an LLC to get risk protection from being sued personally, which doesn't mean that every single person should do an LLC. This is another misnomer. Today's all about misnomers. People think, oh, I got this company, I should file as an LLC. There has to be a good and justifiable risk for you to go ahead and take on the act of incorporating, the fees of incorporating, the paper requirements of court recording, information and bookkeeping and all the things that come with a corporation. Many times the sole prop will suffice, okay? In fact, I read in numbers of a couple years ago, don't quote me on this number, this is just kind of a memory number, but it was somewhere around 92% of the companies in the United States are sole props. People are shocked when I tell them that because LegalZoom and LLCs have become so popular. Everybody thinks, oh, everybody's an LLC. It's not true. So going back to the legal entity, so we know that there is a risk protection between a sole prop and an LLC. We got that. We also know that it doesn't mean just because we get this risk protection, we should jump into this, because I've already talked about what happens when you don't file your papers correctly. And I said that that is from a legal perspective. Okay, here is the shocker, guys, that no one understands, it seems, and I tell people this all the time. They say to me, well, I've been functioning as a sole prop. I'm going to function as an LLC because I want the tax advantage. I hear this constantly. Or I want to have, want to be a real business. I want to have, different deductions I can take that I can't take as an LLC. Everything I just said, guys, is not correct, not correct. When the IRS looks at a company and they see a sole prop and an LLC, the IRS identifies them as a self-employed person. The IRS sees no difference between a sole prop and an LLC. When you register your LLC, you are changing in the eyes of the state of California from a risk protection, but you didn't change anything to the IRS from a taxation perspective. So when I speak about paying quarterly taxes as a sole prop and an LLC, I'm speaking about both of these groups of legal structures because they are not any different in the IRS's eyes. By the way, as a interesting story as to why that is, to help you understand, and I don't know how long ago this was, guys, so I'm going to make up decades. And I'm always clear when I say this is what's true and this is what I'm kind of remembering. So let's say a couple decades ago, maybe even longer. in the world of legal structures business, there was the sole prop and then there was corporations. There was no LLCs in existence. So as I like to tell the story, so people understand it. So what happened is there was businesses that wanted to have that legal protection that I was talking about. And so they went to the IRS and they go, we don't want to be a sole prop because we want that legal protection. But the S Corps and the C Corps, they got these minutes and boards and they got to register the stock and all this paper is really confusing. So IRS, can we have like something that gives us legal protection, but isn't so complicated? And the IRS said, no. You know, the IRS is pretty specific. It doesn't play games. Nope, I don't want to play that game. Nope. And so they were like, really, we got these real estate companies. They just need asset protection. Can't we come up with another type of business that doesn't have all the, no, that's what the IRS said. But the IRS said, if you want that fancy little cool new little business entity, you go to the states. You guys handle it on the state level. So that's why when you see information in whatever state you're filing the LLC, it says it's identified by state statute. LLCs have been created as legal entities by the states, not IRS. IRS recognizes them as a self-employed person, no different than it recognizes a sole prop. So that is why from a legal entity, you have a difference between sole props and LLCs, but from a tax perspective, you do not. Okay, so that was a whole lot about LLCs, sole props, how they differ legally and how they differ from tax. Now let's get into this quarterly paying of taxes. So with that, the very first thing you must understand, you pay taxes on net profit, not on sales, net profit. And as you may have heard, these are passed through to an individual tax return for a S corporation, LLC, and sole prop. But right now we want to focus on the net profit. You pay taxes on the net profit. So if you have zero net profit, that you have no taxes that are being passed into your personal. Now, when it goes into your personal, then what happens is it's depending upon your own tax structure, your own tax situation. So I don't like to get involved in that too much in a summary and overall explanation because there's too many variables. So let's just talk about what gets passed through to personal. So if you have net profit and the company made net profit, then there is a certain amount of taxes that's going to be owed based on your tax structure. Now, what happens is a company or individual, I should say, will be able to avoid what is called an underpayment penalty if they pay a certain amount of tax in. I'm going to say that again, and then we're going to unravel this so it makes sense. A individual company must pay in a certain amount of their taxes that are owed for that year in order to avoid an underpayment penalty. Okay, let's unwrap this and understand this. So our IRS taxation system, and guys, I didn't make this up. This is on the IRS website. It sounds like words I would have made up, but I didn't. It is a pay as you go tax system. Yes, you would think I made that up, but that's actually the legal term for it. So what does that mean? Let's go back in our minds. Some of you are now a W-2, some of you've been a W-2, you're an employee, right? So you get this paycheck and you see the gross income, and then you see this net income, and all these taxes are taken out. You know that where you go, yay. You know that feeling. We all had it at one time. I think, you know, when I was 16, got my first W-2 pay stub and was like, Mom, where did all the money go? Why don't I get this number? But anyway, you know the taxes are taken out. So the point is, did you ever get a pay stub where you said, hey, IRS, I'll catch up with you on that later? No, they're taken out on a weekly, bi-weekly, monthly basis. So if you're an employee, the IRS is grabbing that money on a weekly, bi-weekly, monthly basis. The IRS wants the money up front. First of all, it wants the money up front, but secondly, you know, if you keep the money, you're off to spending it shopping, and then when you have to pay them back, you won't have the money. So it's a pay as you go. So now let's do the scenario where we started a company. Is there an employer over our W-2 taking out the taxes? No, we're the boss. We don't have anybody taking out the taxes, right? So what happens is the IRS has to do something to get us to abide by paying in taxes, okay? The IRS has to do something. So when you speak of something, I know, let's think of it this way. Speed limits. Speed limits are there telling you that you should do this. And if you don't, this will happen. Will it happen all the time? Nope. But if you get caught, this will happen, meaning a ticket and you have to pay something. So I want you to think of the underpayment penalty kind of like a speed sign. It's a rule that if you don't abide by it, you have to pay a penalty. So how do you avoid the underpayment penalty? Well, according to IRS rules, you either pay in 90% of the current year or 100% of the prior year. So let's think about that. If I owe, I'm going to use small numbers, guys. I like using really tiny numbers because this stuff is confusing as it is. We're not going to make it even more. So I owe, I think, $10 at the end of this year, but I don't know where my net profit's going to be. It could be where I don't have those final clients come in. So I'm not even sure if I'm going to owe the $10. Okay. So let's see. What did I pay last year as taxes? Oh, I paid 8 years last year. I'm having a better year. I'm making more money. That's why I owe more taxes, but I only paid $8 of last year. So I can pay in $8 or do quarterly payments of equaling $8, right? And then if I end up owing more money, I can pay it in when I do my yearly tax returns in April or March, depending on what type of company you are, and I will not have an underpayment penalty, okay? So if you pay in 100% of the prior year, you're good to go. So what happens? This is where I see people run into trouble. They start a sole prop, LLC, remember its tax is the same, and they didn't make any money. It happens a lot the first year, right? So they have zero, so they don't pay in any taxes, right? So the next year, they didn't make any money and they say, well, you know what, we don't have to pay in taxes. But the third year they start to make money. Now, technically, if they didn't have to pay in taxes that year prior, they could pay in 100% of zero. But when you go into the following year, if they continue to make money, they have to pay in either 100% of the prior year or 90% of the current. But they got in a belief, since they had never paid quarterly taxes before, that they don't. I have run into more situations than I would have expected where people said to me, I go, well, you didn't pay in the quarterly taxes, you have to pay a tax penalty. They go, but I never had to pay it in before. Usually what happens if you're working with a CPA, they set you up on quarterly payments, and so it's taken care of. But some people use TurboTax and file on their own and aren't aware of this, and then suddenly they're shocked to find out that they had to make quarterly taxes. So you have to know, am I required to pay quarterly taxes? If I am, you want to make sure that you pay in this amount by the end of the year. At the least, have this conversation with your CPA. If you didn't have to pay in the year before, but you're starting to make money, you want to have a conversation with the CPA so you have an idea where your tax burdens are. Now, if you're an S Corp, this gets really crazy. You have to take what's called a reasonable salary. And so S Corp, you know where I said that an LLC or a sole prop was a self-employed person? And S Corp, when you own an S Corp or are taxed as an S Corp, remember I say if you are taxed as an S Corp, you must behave like an S Corp. I then am an employee of the company. Total different scenario from the LLC, the sole prop, I'm a self-employed individual. But if I'm an S Corp or taxed as an S Corp, I am an employee of the S Corp. So you want to think about it like if you're an employees and a working employee, they must be paid. You have to pay employees, right? So what happens is, as an S Corp, if you have net profit, once again, we're talking about net profit, the IRS requires that you pay a reasonable wage. Now, this is where a lot of people get really, really confused. So what happens is the advantage with an S Corp is it eliminates some of the taxation. We're going to talk about that briefly in the next slide. But one of the requirements is that any net profit, you have to have a reasonable wage. Now, the IRS has pages and pages of documents that talk about what a reasonable wage is, but typically tax preparers like to take at least 50% of the net profit and take it as a wage. If you don't take it as a wage, when I say wage, I want you guys now to think W-2. We're talking S Corps here, guys. So if you're an LLC or sole prop, this isn't you. But if you're thinking about being taxed as an S Corp, to get the tax advantage, you have to understand these are the rules you're going to have to come under. So if you take 50% of that net profit, that amount needs to be taken as a W-2 and subject to all the type of taxes as an employer and employee would have. That other part is called distributions, and that part is not subject to payroll taxes. Once again, in the upcoming weeks, we're going to, get through the weeds on this and get into some detail. But the key to know here is if you are an S Corp or taxed as an S Corp and you have net profit and you haven't been taking a reasonable wage, a W-2, it will haunt you, and it haunted people with both the unemployment as well as the SBA loans. But it also could haunt you if the IRS comes back and says you did not take a reasonable wage, because what they will do is they will charge taxes on the entire amount. Okay, let's take this and get into some forms for better understanding. So first, I'm going to go over the type of taxes that we're talking about here, just listing them. And what I've done is in yellow, I have the federal taxes. In green or whatever it's showing up on your slide, these are the California-based taxes, right? So everybody has to pay in the federal tax, okay? If you have net profit, you have to pay in the federal tax. Same as the state tax. Now, your Social Security and Medicare, that is known as FICA, and that is everybody, whether you're an LLC, a S Corp, a C Corp. I know somebody had a question about LLPs. I want you to think about yourself similar to the LLC and the sole props. When you talk about taxation, you're going to have a little bit different of a tax form, but that's what's going to happen. You're going to be under that umbrella in generic conversation, but you're going to have a little bit of a different form on that. Now, going back to what I'm speaking here is everybody pays in federal tax, and everybody has to pay in the Social Security and Medicare, and everybody has to pay in the state tax, okay? And over on the Social Security and Medicare, both an employer and an employee must pay in these amounts. So both an employer and an employee must pay in these amounts. Now, only employees, only companies that have employees pay in unemployment. They pay in unemployment in California. They pay in what's called an ETT, employment tax, training tax, and they pay in an SDI, state disability insurance. Now, that's only when you're considered an employee and you're an employer with employees. Now, remember, with the S Corp, I am an employee of my company. So as an S Corp, I must pay in these amounts as the company. So you can see that the S Corp is having to pay in some additional amounts that the LLC and the sole prop and partnerships do not have to pay in, okay? Everybody has to pay in the ones with the check, but the S Corps only pay in these amounts. Now, this is where it becomes an advantage. Now, that's a disadvantage. Obviously, you're thinking, okay, if I'm an S Corp, I got to pay more taxes in. This isn't going to be an advantage, right? But the key word, which I see somebody writing right now, I see Ruth wrote it in there, so she's prompting me. Sometimes I get to see the question, sometimes I don't, but I see this one, is distributions. If you recall a couple minutes ago, I said that when you're an S Corp, you have the net profit and you have to take a reasonable salary, and it's generally at least 50% of your net profit, right? The other part in an S Corp, guys, remember, S Corp, LLC, partnership, sole prop, this isn't you, okay? But in an S Corp, the other part is known as a distribution. And I explain this in this funniest way so people get it. I go, have you ever walked up and had somebody walk up to you and they were called distribution and they said, oh my God, I'm so tired of working. I'm going to retire and collect, my Social Security and my Medicare. I'm going to quit. No, obviously there's no name called distribution. So that's why in an S Corp, distributions are not subject to the Social Security and Medicare. So that means half of the net profit in an S Corp would not be subject to Social Security and Medicare. So on a S Corp, you have the disadvantage of having to pay in these additional amounts, but you get the advantage of having half of the net profit not subject to what is called payroll taxes. But because you have to pay in these additional amounts, you have more regulation, more requirements. You have to do your own tax return for the company. It usually, and this isn't a hard rule, but usually until you get about somewhere in the neighborhood of 20,000, I'm just giving you a number because people love a number, but somewhere in the neighborhood of 20,000 net profit, not sales, net profit, it doesn't really make sense to become an S Corp because you're having to pay in these additional taxes. But here's a list of the taxes, a brief overview of how taxes are paid, who pays in taxes, to give you a feel for it. Now, this is a Schedule C. The Schedule C is for a sole prop, which is the same thing that is used. Oh, let me try to get that back. I was trying to enlarge it if I could. The same thing that is used if you're an LLC. Now, when you look, I'm sorry, hold on, it went the wrong one. Let me go back. There we go. Trying to make the PDF do what I want, and I don't think it's going to let me. So we're going to have to go with it at this size. Hopefully you guys can see it. So with a profit or loss from a business, this is a Schedule C. Your net profit is this line item 31. If anybody applied for any of the SBA loans, they always knew line item 31. So that is where you identify how much the company made, what is subject to Social Security and Medicare. And remember, as a company, as a self-employed individual, LLC, partnerships, and sole props, you are paying in Social Security and Medicare for yourself, the business, and you get a portion of that off on the tax returns. So you look down at the bottom to see how much you made. Now, in a S Corp, this is a filing tax document for an S Corp. I want you to note right here, if I can draw a straight line, compensation of officers. This is where the reasonable salary goes. So if you see a profit down here, the IRS wants to see a reasonable salary paid here. Now, people who had an S Corp, this here is the amount they use to apply for the loans and unemployment. If they didn't have a number there, if they didn't have any wages, they couldn't apply. Many times S Corps thought it was this number, like it would have been in a Schedule C, but it's not. So that's where the reasonable salary comes into play. So with that, one of the last things that I want to talk about just briefly that I also see a lot is issues when people use QuickBooks Online. Now, I'm not talking bad on QuickBooks. I'm just trying to tell you about something I see continuously. Unfortunately, many people sync the data with their bank and credit card. I am not personally a proponent of doing so. If you want to, you have to check every single transaction. I always say to people, if you sync your phone list, do you think your phone numbers are ever going to get lost? Do you think there'll ever be an incorrect number? And people will immediately say to me, oh yeah, a number gets messed up. All of a sudden I can't call Aunt Betsy. I had to call mom to get her number. So they acknowledge that syncing data causes problems. And I asked them a second question. Do you believe that finance, bookkeeping, accounting is a major component of a company, that it's a major amount of activity, and even in big companies that they invest in a lot of people to handle those type of activities? Oh yeah, bookkeeping's the most important thing. We got to know your numbers are correct for the IRS, for, banks, for your own profitability. They'll tell me that immediately. And then I'll go, then how is it you can believe that you can create a QuickBooks Online account, sync your data, and it's going to mysteriously do everything and it's going to be correct? It's not, guys. Unfortunately, and I tell people, I look at so many QuickBooks Online financial statements, and I have excessively throughout the pandemic, and I see, I'm not exaggerating, but like 28% of them being, I'm sorry, 98%, I meant to say 98% of them being wrong. Now, when you look at the income statement, it's not so obvious. You want to look at the balance sheet and you want to pay special attention to negative numbers. When this sinks, if it's not done properly, you're going to see certain things that will not make sense. So what I'm doing with this slide is I'm telling everybody, you have QuickBooks Online, you're syncing the data. I want you to go into your online. I want you to pull up your balance sheet. Even if you can't read it, look for negative numbers. If you see a bank account balance, and I see this constantly, negative 32,000, I'm like, do you have good friends at the bank? How can you have a bank account with negative 32,000? I know something's wrong. Assets should not have a negative number, especially a checking account. If your receivables has a negative number, that would be like somebody overpaid you. So you have to look at these negative numbers. Now, in draws, distributions, that would be negative under equity, but many of the numbers should not be. So do a quick inspection of your QuickBooks Online. And one last thing that's a scary thing that I'm seeing a lot is QuickBooks, they had synced up where maybe what it did was it recognized any money coming into the company as a invoice paid, income coming in. And so somebody put the money in for the PPP, or they got a grant, one of the California relief grants, and they didn't recognize it as a grant, and QuickBooks picked it up as income. And now it goes into their net income and they're paying taxes on these grants. And the CPAs don't always pick it up. So please, 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 if you've got any of these grants, make sure it is not identified as income. It's still 2021. People have not done their taxes yet. I'm screaming off the top of a mountain because I'm seeing too many of these wrong. And I'm trying to get everybody to check this before they actually do their tax returns so they don't end up into a problem on this, okay? And so that is the lessons learned. Now, we're going to talk briefly. Hold on, it's not wanting to, there we go. We're going to talk briefly about the pandemic cash flow. And my goal for today is get everybody ready, okay? Get everybody ready for next week. So I'm going to say, what is the pandemic cash flow? This is a Loriism, as a client once told me with all my little phrases, they're Loriism. So this is a Loriism. I created this. I'll tell you what it is. Okay. What is this pandemic cash flow? How does it differ from a regular cash flow? Why did I call it a pandemic cash flow? And what information do I need to make it? Okay. Here's the situation, guys. During the pandemic, there was so much, uncertainty. There was just so much uncertainty. People were open, then they got closed down, then they were open again. They didn't know what percentage of sales were coming in. Okay, they got open, but who knows if the behavior was going to have people feel comfortable enough to go back in and have their hair cut. So it was all over the board. And then in the meantime, while they're closed, what was also happening is they were getting the EIDL loan, they were getting other loans, they were getting some grant money, they had money coming in, they had these other things that they had to pay back, but the payments were not required for 6 months or a year, or a landlord said, okay, you don't have to pay rent now, but when you start paying, you have to pay back over 6 months, all these different rulings. Everybody had different situations. So suddenly the cash flows got all these variables. Like I said, uncertainty. You've got money that you got maybe from the PPP, but you don't know if you're going to have it forgiven. You've got a grant, but you don't know how it's going to last. The landlord is giving you some time, but you're going to have to pay double rent in 6 months or a year. All these crazy things were happening. So what I had to do is I created a cash flow that had two different ways of thinking and combined them together. So first of all, let's talk about the ways of thinking. If I look at a forecast, say I'm a startup or I want to forecast sales, I'm going to say, okay, I think my sales are going to be about this much. And I'm really creating a sales forecast, but I'm not looking at the cash flow from it so much. I'm kind of saying, this is where I think sales are going to be. This is where my profit's going to be. This is where I'm going to be return on my investment. All those characteristical thoughts, that's not even a word, characteristic and thoughts that goes into a forecast. It had to be included in this cash flow because now we're forecasting sales, but we have to figure out how much cash is it going to yield, okay? Then you've got the traditional cash flow that says, I owe this much debt, I owe this, I owe that. Where am I financially? Well, what I wanted to do is I wanted to take the amount of cash in the bank and remove the upcoming payables, things you have to pay, the overhead that you have to pay on a monthly basis, including the increases in the rent or maybe not having to pay rent for a while. So I was looking at cold hard cash. I got this much in the bank. I got to pay this out. How many months before I don't have money? But then I wanted to take this overlap section that allowed me to do a forecast and say, well, where can I be if this situation happens? Where will I be if that situation happens? So that is what the pandemic cash flow is. Now, I'm going to go over this in detail, but I'm going to give you an example of what it is. And next week, we'll start talking about what information you have to get, and I'll show you how to build this. So we're going to go over a few things quickly with the time remaining, because I'm picking this up next session next week. So what you need to do is you need to do a list of the monthly overhead bills that you have on a regular basis. You don't have to have this by next week. I'm getting you prepared to show you what you're going to need when you build your own. You're going to have to understand how much you owe people and how much people owe you, and only those that you know are going to pay. If you got a client that you don't know if it's going to pay or not, you don't want that in. You want, I know this company is going to pay me by this time period. So these are givens, and I know I must pay this out by this time period. So you have to understand what is your monthly amount and how much you have coming in and how much you have coming out and what is known to be true. Now, I'm going to stop this share and try to do one magic thing. This is the excitement part where I get everybody wanting to come back next time. So let me just give me a minute, and we are going to show you what we're going to create. So I want you to think of those shows you saw when you were a little kid. I saw it when I was a little kid, where the person would come out with a painting and they would show you this finished painting, and they would say, by the end of this, you're going to be able to paint this. So let's see if I can get this launched. It's taking a few minutes, but in the meantime, Lauren, while this is launching, let me say, is there any questions or anything I need to end with?
So we have 4, and I'll try to get through them very quickly. Kinsley asked, is there a PDF or web page with the pros and cons of different types of filings, LLC, S Corp, sole prop, etc.?
Because they are so involved and they depend upon somebody's personal tax situation, there really isn't a web page that breaks it down perfectly. You can Google and you can see some, and they will say things like, this gives me risk protection, this does not. But it's really a matter of understanding how those situations apply to you from a tax perspective. For example, you may have a company plus W-2 wages, or a significant other that's also filing documents with you. So it gets very specific. So there are different things you can find on the internet, but some of them can be more confusing than not. So I tend to have people say, hey, learn enough about it and have a good trusted advisor to give you exact information.
Okay, thank you. And then Anonymous asked the question, will there be a special class for sole props?
There'll be a class for sole props as well as possibly LLCs and a few groupings. So we're going to talk about the things I talked about today. We're going to go over again and again. These are subjects everybody comes up with. So yes, we will be having classes where we talk about it, but they'll also be discussed on other types of business entities as well in comparison to.
Okay, I have 2 more.
Okay.
So my relief grant is not income. Therefore, I don't have to claim it as such on my 2021 income. Question mark.
Yeah, that is correct. And so what happens is a CPA, when they're doing your tax returns, they're going to understand that this is not identified in income. Now, some grants have different rules, like a relief grant is not taxable in California. It has not been determined, and may have been this week. I haven't tapped up on it, whether the IRS will tax it, what have you. So what I'm telling people is make sure that you have it as a placeholder awareness, so your tax preparer can help you to identify the tax status of these different grants, etc., at the time that you're filling out the tax returns. Where the problem comes in is when people recognize it in QuickBooks as income and don't mention it to their tax preparer, and it goes unseen, and the CPA, tax preparer, EA just automatically takes it as income. That's where it becomes a problem. Okay, so Lauren, what I'm going to do is real quick before we end, I'm going to show the last thing just as an example of, and we're going to pick this up from next time. So let me show you a share. So this is a quick example to talk about what I'm saying with this pandemic cash flow. That's all this is a quick idea of what I'm talking about. So this is an example of one I built. Everybody's going to build their own because it's very unique. And this just takes into consideration, I have $2,000 in the bank. This is the rent, all made up number, guys. These are the bills I owe, right? And this is the cash balance right here. And this is how much the change is during the month. Something I just built quickly. I'm going to show you how to do this. Now, I can look in, we're going to go in details, but I can say, well, this is about where my gross profit was. And I can say, what if I open at 5%? Nope, that's not going to do it. 10, that's only going to give me 500 left over. What am I going to have? I'm going to be at 15% here. That's going to make it positive. What if they turn around and they tell me I got to double my rent in this month? What's that going to do? Oh, no, I can make that. Oops, I put the wrong number in, 2,000. I can, nope. So I negotiate with landlord. No, I can't start paying 2,000 till here. All I did real fast, guys, is show you that these conversations, can I afford it? Do I have the cash flow? How much sales do I have to have? What's going to happen when I have to pay the landlord back? What's going to happen when my idle loans payment starts? These can be calculated within an Excel document with really easy formulas. It can be a piece of paper. It can be a pencil. It can't be a template because you got to get your own data in. So next time I am going to start to walk you through how I created this, my logic, what you have to do to create it yourself, and show you how you can have an understanding of where you are financially. And in conclusion, in summary, I feel like this is such a vital piece of information because so many people, as we all needed to, were flying blindly throughout the pandemic. And as we're kind of getting out to whatever the other end is, but businesses are starting to come in and flourish. And some of these agreements that they made with their landlord, with rent and with loans, they're going to start coming into the fact that they got to make payments. So I believe it's a very important time to stop and say, where am I financially? And start looking at this information and figuring it out and getting a roadmap and knowing today, if you can't make that payment, not finding out when you look at your bank account and it's zero. So with that, that ends this week's series. We're going to pick up next week where we left off with the pandemic cash flow and get to more questions. And Lauren, if you would do like some housekeeping and tell people how they can reach out to us in the meantime, if there's something they want us to address, I'm going to send that back to you for that.
Perfect. And again, thank you, Lori. Thank you to all of our attendees today. You have joined us for our inaugural show, and I think it went really, really great. Congratulations to you, Lori. And thank you again for the great information. For those of you that have joined us today, please know that a follow-up email will be going out, including the recording to this webinar, as well as a link to where you can submit additional questions or show topics. And like Lori mentioned in the beginning, if you or you know someone who might be a great guest for our show, please send them our way. Again, I've included that link into the chat. I will add it again right now. But thank you again. And Lori, thank you. Everyone have a great day.
Thank you, everybody, for showing this. This show is dear to my heart, and I'm excited, and I look forward to seeing all you next week.
Goodbye, everyone.